Mississippi Home Corporation is Mississippi's we are the housing finance authority for the state of Mississippi. This presentation will be going through the Mortgage Revenue Bond Program. This program we've named MRB-7 because we're giving the borrower an assistance of $7,000 to help them with their closing costs and down payment assistance. Mississippi Home Corporation does not do credit underwriting on these loans. We rely on the lender to make sure that the loan meets the conforming guidelines for the product. The Home Corporation is only looking at the Internal Revenue Code procedures. So the first thing that Home Corporation is looking at is the first-time homebuyer status, or if the person has had an ownership interest in the past 3 years, unless they're purchasing in a target county. Target means economically distressed or a difficult to develop area, or if a borrower is a qualified veteran, active or honorably discharged. They also are exempt from the first-time homebuyer rule. If they are married, their spouse is also considered a veteran. So if the spouse had had ownership of an property interest in the past 3 years, that would not disqualify the household from meeting the first-time homebuyer requirement. If the veteran, the borrower, is not married, but there are other persons in the household that have had an ownership interest in the past 3 years, that would disqualify the household from meeting that first-time homebuyer rule if they were purchasing in a non-target county. We'll take a look at the income limit chart in a moment to look at the counties and the income limits for that. The current income guidelines are based on the county that they're purchasing a property in and the number of persons within the household. Our current income ranges are between $52,800 and $89,320. And of course, this program is for persons that need down payment or closing cost assistance. Okay. Home buyers must meet the conforming guidelines based on FHA, VA, Rural Development, Fannie Mae, or Freddie Mac products. Of course, this is dependent upon your servicers. Some servicers aren't offering Freddie Mac products, so you're restricted to whatever your servicer overlays are. The borrower must be or intend to become a resident of the state of Mississippi and a U.S. citizen, or an alien admitted for permanent residency. The credit score depends on the conforming loan product. Mississippi Home Corporation does not set credit score limits, but your servicer probably will. If you are, for instance, servicing through Standard Mortgage Corporation, their minimum credit score is 640. So please be sure to contact your servicer to verify what their credit score requirements are. Okay, the borrower is going to receive a $7,000 0% 10-year deferred second mortgage. This is forgivable as long as the events of default do not occur within the 10-year period, and I'll talk about those in a moment. But the lender is preparing the first and the second mortgage LEs, CDs, and 1003 in your name, and you're completing the closing package. Mississippi Home Corporation does not send anything to the closing table. So whoever is preparing your closing package needs to make sure that our second mortgage note and deed of trust are generated through either our system or an alternate doc provider. There is also a tax-exempt financing rider and a borrower affidavit. This tax-exempt financing rider has nothing to do with the second mortgage. This has to do with the financing of that first mortgage loan. So the rider is actually recorded with your first mortgage deed of trust. Mississippi Home Corporation should not see this rider come back through our office. The tax-exempt financing rider, there's 3 riders that we have on our system of our documents. There's one for an FHA loan, there's one for USDA or VA loan, and there's a third document, one for a Fannie Mae or Freddie Mac conventional loans. Mississippi Home Corporation does allow the lenders to use alternate document systems versus using our documents off of our system. as long as they are changing no language within the documents. Okay, you're funding, the lender is funding the first and the second mortgage at the closing table. Mississippi Home Corporation is actually shown as the lender on the original second mortgage note and deed of trust, but you're shown as a priority lender. We'll take a look at those in a moment. In order for us to reimburse you, we must receive our original second mortgage documents and your wiring instructions within 30 days, hopefully, of closing. The purchase certification package, this is the third package that comes to Home Corporation. It contains that executed borrower affidavit that was sent to closing and a copy of the first and second mortgage CDs. Those would be uploaded to our system, and then you would mail the second mortgage note and deed of trust and wiring instructions to Home Corporation. The servicer, depending on who your servicer is, will not purchase your first mortgage loan without Home Corp actually issuing the purchase certificate. Once we receive all the purchase cert documents back, they're verified for accuracy, and then we actually change the status on the loan to a purchase certification. Whoever has reserved the loan online will actually receive an email to let you know that the status has been changed and we have actually issued that PC, so you would go back into the system and print that purchase certification and provide that to the servicer as part of the package that's going to them for purchase on the first mortgage. Okay, the events of default on the second mortgage, there's a 10-year requirement that they not sell the house or refinance the home or not occupy the home. Any of those instances occur, then the borrower is obligated to repay Home Corporation the full $7,000. If the loan, that they meet the 10-year requirement and without an event of default, Mississippi Home Corporation will satisfy the second mortgage lien. Okay, again, this is a 10-year deferred 0% forgivable loan. Now, there is another 10-year rule that applies to this program, and that is potential recapture tax. This, again, has nothing to do with the second mortgage. This has to do with the financing on the first. So if the borrower sells the home in the first 10 years, then they not only owe Home Corporation the $7,000 back, but they also potentially would have a recapture from the Internal Revenue Service that would have to be filed on their federal tax returns, and we'll take a look at that in a moment. There is no liquid asset limit under this program, nor is there any reservation fee to be paid to access the bond program, and that's not by the borrower or the lender. There's no fee to participate in the program. The third item that Home Corporation is looking at is the purchase price. We're making sure that the purchase price does not exceed our acquisition limits in the target areas of $289,705, or for non-target areas, a purchase price of $237,031. Mississippi Home Corporation does require pre-purchase homebuyer education counseling, and you can use any online course. NGIC is used a lot, Radian, Freddie Mac's Credit Smart program. If in the event that you're doing a Fannie Mae HSA preferred product, then Fannie Mae requires you to use their online course for the borrowers, and they charge for that course. You cannot charge discount points to the buyer or the seller. You don't have any control over the interest rate, and MHC sets the rate for the loan. Okay, we're going to take a look at the full package documents, but this is some items that were changes that were made last year in the program when we did away with the old cash advance and started with the second mortgage. And within the reservation package, again, there's several documents, but we removed the $200 reservation fee, but we included a notice to borrower, second mortgage disclosure. Then we have a compliance package. The documents that were changed there is we had at one time a borrower affidavit, which required a notary. So we've removed the affidavit and created a borrower certification, which requires no notary notary acknowledgement. We have what's called a non-borrower certification, This is used for other persons in the household that potentially could have had an ownership interest in the past 3 years. So they would just execute this borrower certification if they were of age to have owned a home in the past 3 years. Child support statement. At one time, we used to require a DHS statement if there was no divorce decree. This was to verify whether they were or were not receiving any child support. We're not requiring the DHS statement any longer. We'll just have them execute the child support statement and also a letter of explanation if in the event that they were supposed to receive child support and are not receiving child support. That way we won't count what potentially they should be getting and are not receiving if that's the case. We've also removed the 3-year tax return or tax transcript requirement. In lieu of that, we're requiring a credit report and a fraud guard or an equivalent report on all the occupying borrowers. This is so we can verify that there's been no ownership interest in the past 3 years. As mentioned before, we removed the 3-year tax return requirement, but the borrower certification still allows Home Corporation the ability to condition the loan for the 3 years tax returns on all household occupants in the event that we're not satisfied with what we're seeing on the credit report or fraud guard. To date, we've not had to condition a loan for that, but we still have the ability to do so. And I had mentioned previously about the purchase certification package. There would be documents uploaded to Home Corporation, to our system. That would be the borrower's affidavit and a copy of the first and second mortgage closing disclosures. Then you would mail the second mortgage note and deed of trust and your wiring instructions to Home Corporation, and the instructions on where to mail those is on the checklist, and we'll take a look at that as well. Okay, upon receipt of all of the documents, so we're talking about 6 documents, the borrower's affidavit, the first and second mortgage CD, the note, the deed of trust, and the wiring instructions. Then, like I said, we would review that for completeness and accuracy, and then within 2 business days, we would reimburse the lender for the $7,000 that you upfronted at the closing table. The features of this $7,000. Again, it's $7,000. It's to cover up. You can charge. This is an optional fee. It's not mandatory, but you can charge up to 1.5 points on origination fee and any normal customary closing costs. Now, we're going to be looking at that second mortgage closing disclosure to verify that there have been no fees charged other than the 3 I'm fixing to refer to. That is a recording fee of the second mortgage. If you charge an application fee for the second mortgage, you can show that on that second CD. And if they had to pay or paid for homebuyer education counseling, that can also be reflected on that second mortgage closing disclosure. Now, our funds cannot be used for prepaids, such as hazard insurance and taxes. We will allow the money to be used for upfront MIP, PMI, VA funding, or rural guarantee fee. They can't receive any of our funds back, but they can receive their earnest money back at closing. If in the event that the full $7,000 has not been totally utilized at the closing, then whatever is remaining must be applied as a principal reduction after the loan closes. I highly suggest that before you reserve the loan, you have a very good idea of what your closing costs are going to be, and if you know that there's going to be funds left over out of the closing, apply more towards the down payment. Even if FHA only requires a 3.5% down payment, put 4% or 4.5%, whatever the case may be, so you utilize the full $7,000 and don't have to do this principal reduction after the loan closes. Okay. Property requirements. Any conforming loan has to meet guidelines based on the loan type you're doing. So your underwriter will make sure that it's meeting any property requirements that are applicable. Of course, this bond loan cannot be used for investment properties. If they are found renting the home, then Home Corporation actually has the authority to call that note due and payable. We've not had to do that in the past. We actually can allow waivers for borrowers to actually rent the homes. We have a lot of military in the state of Mississippi, for example. If they are moved, transferred to another state or whatever the case may be and aren't able to sell that home, then they can send us a letter asking us to consider allowing them to lease that home due to the hardship that it may cause for them not being able to sell that home and not being able to rent the home to make those mortgage payments. Then we would also just want a copy of their lease agreement, because if we do give them a temporary waiver to lease the home, then we have to make sure that they're not making any money off the home, cannot be used for investment purposes. So they would be required to not charge any more than their mortgage obligation, or mortgage obligation plus property management fees if there are fees included. We will do that. We won't do a continuous waiver on this. It will be a temporary waiver. If they do a 6-month lease, it would be 6 months. If it was a 12-month lease, we'd give them 12 months. They will eventually either have to reoccupy the home, sell it, or refinance. If they refinance the mortgage, then that takes it out of the bond status. So that allows them to lease the home and do whatever they want to with that property after that case. And I'm sorry, I went to the wrong screen. Okay, we do allow manufactured homes as long as it's meeting certain requirements. Now, Freddie Mac, under their HFA Advantage product, do not allow manufactured housing as of this time, so that would not be allowed. And there are some servicers that don't allow manufactured homes. So you'll need to, again, check with your servicer on what their servicer overlays are. Standard Mortgage Corporation, one of our servicers, does allow manufactured homes, and they've given us this information for, they had many questions regarding manufactured homes. I'm not going to read this PowerPoint to you, but you can certainly refer back to it to see what guidelines they have set up as far as manufactured homes are concerned. MHC sets rates on the bond program. We set them each Monday morning at 9 a.m. The rates are locked and good for the remaining portion of that week as far as us changing rates. We, again, set the rates at 9 a.m. You're able to reserve the loan Monday through Friday from 9 a.m. to 11:30 at midnight, 11:30 at night. You can't reserve after 11:30 or prior to 9 a.m. Monday through Friday, and you can't reserve on Saturday or Sunday. Once your loan is locked, though, then you will be able to access your loan on our system 24/7. Now, the locks are good for 45 days on a new or existing home, or 120 days on proposed construction. If in the event that you can't close within this time frame, then you can do a 30-day extension, and there's a cost. There's a $50 fee that's paid online, and we'll take a look at where you do that in just a moment. Okay, we'll go into the online procedures in just a moment, but we also have a user guide on our website as well if you have questions regarding that, the setup. So to recap that process, you're processing the first and second mortgage. You're reserving the loan online with us, and at the same time you need to be reserving that loan with your servicer. Mississippi Home Corporation is also shown as a secondary mortgagee on the homeowner's insurance policy, and this is the mortgagee clause here. These are some special feature codes that would be used if you were doing the HFA preferred Fannie Mae product, and I don't have the Freddie Mac codes at this time, but your underwriter should be able to locate those if you're using the Freddie Mac product. you're going to be scanning and uploading documents to us. The reservation package is due to Home Corporation within 3 business days. Then the compliance package is the one that's due to us prior to that 45 or 120 days. Once we receive that compliance package, then it's transferred or assigned to one of our underwriters. They have 3 business days to turn that loan around. You'll either receive a reservation, you'll receive an email to let you know that the loan has been approved and you can print your conditional commitment, or you'll receive an email to let you know that there are conditions and what those conditions are. If there are conditions on the loan, then there's potentially another 3 business days that can be added on to that turnaround time. And then the final package is the purchaser package. Again, after we've approved the loan, then the lender would need to go back into the system and print our conditional commitment. Again, the package for the PC documents are noted here, your first and second CD, again, the note, the deed of trust, and our wiring instructions. The first 3 are uploaded, the second 3 are mailed to Home Corporation. Once we review that process, then we will change the status to a PC, so whoever is, again, reserving that loan will receive that email to let you know that we've changed the status on that loan to a purchase certification and need to go back in and print that. Once you've reserved a loan, you'll go into what's called the print document section. This would actually give you those documents that are pertaining to the bond program. We did create a document set that contains all of the documents. So once you get into the system, you may not need the child support statement. You may not need the non-borrower certification, so you could call those documents out. Also, you would call one of the 2 of the mortgage addendums out, depending on your loan type, and keep the one that applies to your loan. Okay. This is my contact information. So if you need to contact me pertaining any questions you may have to the compliance on the loan, please contact me. If you have any questions pertaining to the system or just generic questions on the program, you're more than welcome to contact Macy. Macy and I both receive emails 24/7. So we'll be able to get back with you as soon as possible. My staff does not receive emails 24/7. Okay, now what we're going to do is we're going to get into the system. If I can get out of this PowerPoint. One moment, and I apologize. Okay, this is Mississippi Home Corporation's website. You can access it by mshomecorp.com or mshc.com. This is where you can find out what our rates are. You click on this link here and it will take you to a list of what our current rates are depending on the program you're working. Mortgage revenue bond rates are 5.19 for government currently and conventional 5.44. Again, this is subject to change each Monday. You can also find out the funds available. I will mention that regardless of what this dollar amount is, Mississippi Home Corporation will always keep money on the street to fund the program, and we're covering the first mortgage here under that. Go back to the home page, and then you'll go to the lender's link here. Okay, here's where you would access the program resources depending on the program that you're looking at. Again, we're going into the bond program. Here is where you would actually pay a program fee. If you were going to do the extension on the bond program, you would put our loan number here, your borrower's, the primary mortgagor's name here. You would click MRB extension and then continue and follow the prompts to pay that $50 fee. Mississippi Home Corporation does not have a does not require mandate who pays that fee. So anyone can pay that fee. Okay, back out of here. Now, we'll go over to the MRB Lender Resources page. I will suggest that if you have not already signed up to receive our notices and bulletins, that you go anywhere on our website except for the home page, scroll to the bottom of the screen, insert your email address, select lenders, and then confirm. So that way, if there are any changes or notices to the lenders, this is how you'll be notified. All right. Once we do, if we do a bulletin, then we'll email the bulletin out to all the lenders, and then we will post it on our website so you can access it again here if you need be. Our program manual, this is a PDF searchable document, so you should be able to find any answers to questions that you may have pertaining to the program. Here's where you can access our reservation user guide. Now, one of the forms that generates in that document set that I mentioned previously is not populating the data. That happens to be this potential recapture tax form. So we've created it on the website. So what you see here is the form that you would insert your loan amount here, and it would calculate the top portion of this recapture form for you. Then you would go to the bottom, insert your county name, and insert the income limits for 1 to 2 in the household, and you also need to complete the 30 or more, because you do not know where they're going to be in the year of sale to determine what income limit that they're looking at to see if they've exceeded that income limit. Now, potential recapture tax. Again, this only comes into play if they sell the house, and also they have to have made a gain on the sale, and their adjusted gross income in that year of sale has to be in excess of this limit, depending on what that year of sale is. Okay, so if one of the two don't occur, there's no gain, there's no recapture. They're not over the limit, there's no recapture. Okay, now I want to show you a sample worksheet that can be given to your borrowers to show them how recapture is actually calculated. So for worst case scenario, you would assume that it would be year 5. That's not the case. It's actually year 4. IRS's formula mandates that you round up to the next year. So year 5 would be rounded here. And in this example, let's say the maximum recapture was $81.25. If they are selling the house in the true year of 4, and let's say they're in a 3 or more category now, and the limit on that was $73.6. Let's say in this example, their adjusted gross income in the year of sale was $100,000. You subtract the difference between the income limit and what their income is, and you get an amount, and then you divide that by $5,000 to obtain a percentage. So instead of them paying $81.25 in recapture to the IRS, they're only paying 5.23% of that amount. So in this case, their maximum recapture would be $424. All right, so this is a really good example of how to calculate that fee. Okay, I'm going to go back out here, and now we'll take a look at the income limits. Currently, we're running under income limits that were set last year by HUD, and we have formulas in order to gross those incomes up. So any application you've taken out on or after April 25th of last year, these are the income limits that are applicable to that time frame. There will be new income limits set by HUD, and so there could be a potential for you to be running under 2 separate sets of income limits. So you would just want to determine the application date and what chart applies to that income limit. Now, the way to read this chart is, for example, Adams County happens to be what's called a split county, meaning there are non-target tracts, census tracts within the county, and there are target area tracts. So if you're using a non-target tract for 1 to 2 in the household, your income limit would be $52,800. If you are in the targeted area of Adams County for 1 to 2, your income limit would be $63,360. 3 or more, the same thing. Non-target, $60,720. Target would be $73,920. Any county that has an asterisk by it, and these are subject to change each year, these are fully targeted counties. Being target means, again, it's an economically distressed or difficult to develop area. The first-time homebuyer rule is waived by the Internal Revenue Service if they're purchasing in a target area, plus their income limits are calculated at a higher percentage. If you are working with a county that has no asterisk by it, that means it's fully a non-target county, meaning they have to meet, the household has to meet the first-time homebuyer rule. At the bottom, we've again listed our acquisition purchase price limit. Okay? If you don't know, and you need to know when you're reserving a loan up front, whether you're working in a target or non-target area. So if you're not sure which is what area, if it's a split county that you're working with, you can go to the searchable map feature, and what will appear is a map, and it has a place for you to input the property address. My resolution on my screen is really small, so bear with me here while I include an address. And I'm going to put Mississippi Home Corporation's address in here. We are located in Hinds County. Once the map appears, then you can reduce the resolution, and you'll start seeing these areas in red. Any area in red happens to be a target area. So you'll see that Home Corp's located out of one of those target areas. But this will give you a clue as to whether you're working in a target or non-target area. If you don't have your census tract. And then here again are the split counties. Here you can actually access a map and actually see the tracts outlined on a map. So this is tract 12, tract 9, tract 20, and so forth. Those are the target areas within Hinds County. Okay. Now, to log into the system, let me go back over here. You go to this lender login, and each user will have access to codes to get into the system. I'm going to open up a loan that I have set up as a test loan in the system. And depending on what type of access you'll have, this is the menu you may see. So I may not see this user maintenance screen. I'm going to not start with the registration piece, but go to the loan detail screen to open up a loan that I've got set up for test purposes. Okay. Retrieve. You can retrieve a loan by my loan number, Home Corp's loan number, or your loan number. Again, this is once the loan has already been reserved, or cross-referenced by the borrower's name. So I'm going to hit retrieve, and what will appear is just the basic loan data for this particular test loan. And if we have received the compliance package, then again it's gone to or been assigned to one of our underwriters, and you'll be able to see who that underwriter is on the loan. You'll be able to see what status the loan is in, and then you'll be able to see any unsatisfied conditions if the loan happens to be in a non-compliant status. You can see the conditions here. You'll also notice that you have a place here for reserve second. You do not reserve the second mortgage on the bond loan. This is only for our Smart Solution product, and they are not combined. So ignore the reserve second under the bond program. If you were to cancel a loan, you would have to upload a notification of change form to us and then go back in and do this cancel application to throw the loan amount back into our allocation funds. You can actually go to your loan application until we've received a reservation package. You still have access to change data on the loan level. But once we've changed the status to a reservation package received, then you no longer can change data in the system. That would be handled through a notification of change. Now, let's take a look at the print document function. Okay, this is going to open up that list of documents for the bond program. Again, you may not need all of these, but I suggest on the front end that you use this document set. Again, it will create all of these documents for you, and then you would just call out the documents you don't need. For example, the child support statement, the 2 mortgage addendums that don't apply to your loan. So we're going to open up this document set, and what will happen here is you'll receive a PDF set, a PDF document set of all the forms. Once this loads, then you'll start seeing the forms. Any data that has been put into the reservation screens, most of it will come into the form itself. We will not populate it with the servicer, so you'll want to populate that, who's completing the data. That doesn't come across. Loan type, property status, property type. We do not need to know who the closing attorney is at this time on the front end. This is the checklist of items that you're going to send to Home Corporation. Okay, the reservation package, this is the package that's due to us within 3 business days of reserving the loan. If we don't receive the reservation package, we have the authority to cancel your reservation, so be sure to upload these documents to us after you've reserved the loan. I will suggest that you don't reserve the loan until you've gone through underwriting. Again, just kind of stay within the time frame, the 45 and 120 days time frame, to make sure that that's being done. So you would be sending us the reservation form, which was the form here. Then you would also send us the reservation confirmation. Once you've reserved the loan, the system will generate a confirmation that it's been reserved. Then our checklist, your sales contract with any addendums, your executed 1003, and this is your initial app. It does not have to be a final application. The recapture form that we looked at previously, and the notice to borrower, and I apologize, this number should not, this data should not be here. This is what you should be seeing here. And a copy of the homebuyer education certificate. If you're doing the teacher's grant, there's a loan agreement that would be mailed to Home Corporation. You can use any grant program with the bond. If it has takes a lien position, then it would have to come in 3rd position to our 2nd mortgage. Okay, compliance package. This is the package of documents that's going to come to Home Corporation to be assigned to one of our underwriters to verify the information meets the Internal Revenue Code. The transmittal summary or your loan analysis or your 1008. The VOE and pay stub, this is current within 30 business days, 30 days of our receipt. This is for all household members. Now, if you have a student living in your home, you're talking about a child that's 18 to 22 years old, they can actually have a part-time job, and we don't have to count their income as long as they are a full-time student. So if that's the case, then we would want you to upload a copy of the school transcripts to verify that that child has is going to school full-time. It would be submitted to us as an exception documentation. Maybe they're self-employed. You'd be sending us a executed, signed P&L. We don't need an audited P&L. Or if they're receiving SSI, so SSI, pension statement, any of that type of documentation would come in under exception documentation. We have an income calculation worksheet. We'll take a look at that in a moment. The credit report and the fraud guard. Again, this is fraud guard or equivalent report on all the occupying borrowers. The borrower certification, non-borrower cert if it's applicable, child support if applicable, the appraisal. Mississippi Home Corporation doesn't need the full-blown appraisal. All we need are the pages, the beginning of the appraisal through the appraiser's signature. We're verifying that the property address is what was reserved. We're verifying the borrowers that are on that document. We're verifying also that it has a 30-year economic remaining life. The rest of the documentation we don't need. Notification of change form, if it's applicable. We'll take a look at that in a moment. Even though Home Corporation is not sending anything to the closing table, we still need to know who the closing agent is, so there's an attorney information form that would be required to be uploaded to us. The exception documentation, I made mention of that before as far as certain type of income documents, that this could also include a divorce decree, or whatever else that may be applicable. We have our own letter of explanation that would be used if necessary. And if you're doing a buy-down, we'd want the buy-down agreement, a copy of it, a 203K rehab worksheet. If you're doing 203K, make sure your servicer allows that. And if you were doing a teacher's grant, a copy of the preliminary closing disclosure. So again, once this is received, then we will have 3 business days to turn that loan around for either approval or to show you what conditions apply. The purchase certification, this is the closing side, or the post-closing. Again, we want the checklist, the affidavit, the copies of the final executed first and second closing disclosures, and if you were doing a teacher's grant, we'd want a copy of the first mortgage note and deed of trust. This would be uploaded to Home Corporation. The final documents and wiring instructions are mailed to MHC, Attention Single Family, to 735 Riverside Drive, Jackson, Mississippi, 39202. And you're sending us the original second mortgage note, the original recorded second mortgage deed of trust, and your wiring instructions. Okay? And you can ignore this section here where it says applicable only on second mortgage, LE done in lender's name. That does not apply anymore. Okay. You can discard this recapture form because, again, it doesn't populate. But the way it's calculated is $150,000. This is your full loan amount times 6.25% gives you your maximum recapture, and then it would be 20% of this number, 40% of the number, so on, and then reverse back for the remaining last about 4 years. The income limit, you would put the county income limit that's current at the time, or 1 to 2 and 3 or more, and then these are grossed up. Year 0 is the exact same amount as the actual county limit. Then year 1 would be 105% of that. Year 2 would be 105% of the 1 year, so forth and so on, grossed up 105% each year. Now, I will make note, too, when we're referring to a co-mortgagor executing our documents, only an occupying co-mortgagor executes this form, any of our bond forms, except for the mortgage addendum that's recorded with the first mortgage deed of trust. Only occupying mortgagors execute our bond forms. So we'll be looking at your 1003 to see if that co-mortgagor is actually going to be occupying the home. If they are not and they execute these forms, the loan will be conditioned to remove that signature from the document. We also are looking at your 1003 to see the manner in which the title is to be held. Under the bond program, a non-occupying co-borrower cannot take title to the property. The servicer is secured by the note and deed of trust on the first mortgage. They do not need to take title. So if we see that they are taking title, we will condition the loan as well. This is a copy of our income calculation worksheet. It shows you all of the types of income that Home Corporation is required to count. So here's your, again, occupying household members, income, secondary wage earner, other types of income, self-employment income, come down to verify what that limit, what that account is, and what the income limit is, and what applicable income they've calculated. The borrower certification. This basically is the IRS guidelines on one page. It's saying that they intend to occupy this as their primary residence, that they are a resident of the state of Mississippi. Also, their prior ownership. Have you or have not had ownership interest in the past 3 years? What the family household income is based on the limit and the county, and then the acquisition cost or purchase price, what your contract price is, and is this a new or existing home, and what county and what the limit is for that county, which is either the 289 or the 237 acquisition purchase price limit. The lower portion of the form, any additions to the acquisition cost would be executed here. This field here is your beginning purchase price. This is what you paid, which is what the sales contract is reflecting. Then you would add any additional cost here or subtract depending on these items. The only time I've ever seen anything within this document, I'm not saying that would be the only thing, but within the 24 years I've been here, the only thing I've seen is ground rent. We have leasehold property here in the state of Mississippi, so you would add the ground rent. And then what we're looking at is the total cost to make sure it's not in excess of the 289,705 or the 237,031 limit. And then again, it's executed by your borrowers, occupying borrowers. This is the non-borrower certification. This is for other persons within the household that potentially could have had ownership. So we need to know whether they have, or if this is a target county, then they would indicate as such and it wouldn't be applicable, the first-time home buyer rule. This is the child support statement. This would be used if there was no divorce decree, if there was court-ordered child support, whether they are or are not receiving that, and they would outline the children's name, ages, and how much money that they are actually receiving or not receiving for each individual, and we would document this against your 1003 as far as dependents are concerned. The notification of change form. In the event that you are wanting to extend the reservation on the bond, this form is used for all of our programs. So you'll see SS, that stands for Smart Solution, MRB is the bond program, NCC is the tax credit program. So if you're going to do an extension on the bond, you would click this, you would check MRB, and provide us with a new expected closing date, and they will get a 30-day extension once the $50 fee has been paid online. We won't extend the loan until we see that $50 fee come across on our system. If you were increasing or decreasing a loan amount, you would indicate that here. If there was a rate change, again, you can't change our rate, especially if you've reserved a loan and then the rates go down the next week. You can't cancel a loan and come in at a lower rate. Your rate is locked. So very seldom will this ever occur here. In the event that the property doesn't qualify, you can keep the reservation and change it to another property. If the seller backs out of the contract or refuses to make repairs, whatever the case may be, they can keep the reservation and the rate and change it to another property. You would indicate the new property address here, and then, of course, you would provide us with a new sales contract, a new loan analysis, or transmittal summary, whatever the case may be, because the loan amount is most likely to change. If in the event that the borrower goes to another lender, they can still keep the reservation and you can transfer that reservation to another company. We would want you as the originating lender, the first originating lender, to notify us of this change, of this transfer. Then if all else fails and the loan is not going to go through, then you would indicate that you're canceling the reservation and give us a reason for cancellation. Then you go back online again and select the cancel application feature that I pointed out earlier. This is a sample of the mortgage addendums. This is the FHA version. These tax-exempt financing riders, again, recorded with your first mortgage deed of trust, are referencing the Internal Revenue Code. And it's recorded with the first mortgage. This is the VA USDA form or your Fannie Mae Freddie Mac form. Here is our attorney information form, giving us the information on who's going to be who the closing agent is. This is an example of our LOE, and it contains information here in the event of forgery, not forgery, but that they're not stating anything that's a false statement. Notice to borrower. This is our second mortgage disclosure. It gets into the events of default. It outlines that this is a second mortgage, zero rate for $7,000, and what would be required to be repaid to Home Corporation in the event that they sell, refi, or non-occupy that home as a primary residence. This is the borrower affidavit. This basically is a document that goes to the closing table stating that if 120 days have elapsed since the borrower certification was executed, then have we received any updated income information on this loan. This is an example of our second mortgage note. Again, even though the lender is funding this at the table, Home Corporation is shown as the lender, and the deed of trust shows you as priority lender. We'll take a look at that in a second. So you would include the county that where the document's being executed, the date that it's being executed. This is a sample of how the deferment works. It's 100% deferred each year as long as no events of default occur, and those events of default are outlined within this document. Again, sell, refinance, or not occupying that home. And then it's executed by the borrowers. Again, we are not considering a co-signer, what we call a co-signer or a non-occupying co-borrower. We're not holding them responsible for the $7,000. So you would only have the occupying borrowers execute this note. And include your NMLS information here. This is our second mortgage deed of trust, outlining, make sure the document's coming back to you so you can track that document coming to us. The date, the borrower's name, again, the date of the document, the borrower. Here's the note date here. Here is your maturity date for the second mortgage. It's 10 years from the date of the note. Here's where we show you as priority lender, so your company name goes here, and the first mortgage loan amount goes here. Then it would be executed at closing by the occupying borrowers, notary acknowledgement completed, NMLS information again, and the legal description. Okay, so that is the document set. Now, if in the event that we've conditioned the loan for something, you don't need to go back and print the entire document set. You can just print whatever document needs to be corrected to satisfy the condition on the loan. All right. If you see something in a light blue, that means that the status has not changed in order for you to actually see or print a conditional commitment. We haven't approved the loan. We haven't received our closing package, so you won't be able to access those documents. When you see a date beside something, that means that it's been printed, just to let you know where you were in this set of printing information. Okay? Now, when you're within this system, do not use your back browser. Always use your back or next buttons. If you use your browser, it will throw you out of the system. Okay, to get documents to Home Corporation, you go to the document images area link, and here you'll see a checklist of items. This mimics the checklist that we saw earlier as a form. So on the reservation package, you're getting ready to send us that. So you would want to send us the contract, the recapture form, the homebuyer ed certificate, the checklist, and the reservation form. So you would check this and then go to the top and say Get Index Sheets. What will happen is in this case, I've checked 5 items. So there will be 5 index sheets provided. This is the one for the sales contract. This is the one for the recapture form, so forth and so on. What you're going to do is you're going to place each index sheet on top of the corresponding document, take it and print or scan the whole set of documents into your system and save it somewhere. Okay, then you're going to come back to the screen, choose your file, wherever you named it, and wherever that may be. Pull the document up, go to the bottom of the screen, and hit Upload. That will get the document to Home Corporation and to our underwriters into the right bucket, so that speeds up the process of them actually processing the loan, turning it around. Again, on the PC package, you'll see there's no place for that second mortgage note and deed of trust. Again, those documents plus your wiring instructions have to be mailed to Home Corporation. You only are going to upload the CDs and the borrower affidavit. And the other documents are in the event that you're doing the Teacher's Grant Program. Okay? So that's how you upload documents to Home Corp. If you do not have access to the system and you need access, please email me or Macy. Macy will contact me in order to get y'all set up in the system. So I would just need who the contact name is, what address you're located at, your phone and fax number if applicable, if you have a fax number, and your email address so we can get you set up in the system. If you have multiple branches and if you're a processor or a closer or part of the post-closing staff, you need access to all loans in the system. So that requires a special branch code. Your admin, whoever your administrator is on your site, actually can set up users and lock users out of the system, but they are unable to login access for all access to all loans. That has to come through Home Corporation. Okay? All right. So to actually reserve a loan, you would go through this new loan registration. So once you link here, then it will give you access to whatever programs your company has signed up to participate in. You may not see all 3 programs, but let's just move on with the bond. So you'd select bond, and as I stated before, you need to know if it's in a target or non-target area. So let's work with a MRB non-target loan. Okay, and I'm going to quickly go in and complete this data just to show you what is coming across to Home Corporation. And I'm just dummying numbers in here. Okay, bear with me and we'll get through this as quickly as possible. There's a lot of drop-down tables within the system, so make sure you're using those correctly. Make sure you're putting in all the information that you possibly have. And a lot of the data is not actually required. Originator, phone, fax is. Okay, if you don't have a fax number, just dummy one in to the system. Okay, the rate that you selected is based on the loan type that you selected. Then go to next. You'll see that there's 5 screens here. So we've started with the loan info screen. Now we're going to move into the property screen. Okay. Again, I'm just going to throw data into the system. Please, too, also, if you are in the system, make sure you're in a cap. That helps us on our side. Okay. It's hard-coded for Mississippi, since not only properties are eligible or in Mississippi. All right. Sorry, went too far behind. We have put into the system non-target area. So if you are working in a target track loan, please go in and just change the status to target. Okay. We've also, since the majority of loans we see are in a non-target area, the majority of loans we see are existing construction information. You can change that here as well. I'm just going to, again, just throw dates in here. I don't need all of this information, so I'm just going to put in what I'm going to do to get a good reservation confirmation. Next, the next screen is your additional info screen. You can select here, or you can hit the next button. Either one will work. Okay. If I had an appraisal date at this time, I would enter it. And originator name, and hit next. Now we're going to be going to the mortgagor screen. Again, we typically, if this is a non-target area, it would be the majority of loans we're doing that they've not had prior ownership, so we put that as no, but you need to change it if that's the case. Again, they can have prior ownership interest if they were a veteran and meet those guidelines, or if they're purchasing in a target area. Okay, I'm just going to throw an address in here. Okay, we get into the borrower's information. Just going to throw arbitrary information out here. Work down table for whatever the occupation type is. Credit score, this is the representative credit score for the loan. And then as far as income, you have all different types of income that you can input in here. If you need other, you select other. You can use these other index income codes if you need for other information. I'm just going to make this base income, and it's hard-coded that way. Not hard-coded, it's set as base income to begin with. And then you put that monthly income in here, and then you go to next. Now, the next screen happens to be the co-mortgagor screen. If you are using a non-occupant co-borrower, we don't count their income into the household, so you would not put that into the co-mortgagor screen. But if you have an occupying co-mortgagor, this is where you would input their information, and we have places for first, second, or third co-mortgagor, and then you hit submit. If you don't have a co-mortgagor, you still have to go to this screen in order to hit the submit button. Once you hit submit, and as long as all the data that's required is put into the system, you should receive what's called a reservation confirmation. This is your reservation confirmation. So you would go up here, printer-friendly version here, and you would get that index sheet to put on top of this document, and you would upload it to us. Okay. This gives you your expiration date. Again, it's set on 45 days for an existing residence or 120 for construction. So this would automatically set here, so you need to make sure that you're meeting this deadline. If you're not going to, then you would go in and request an extension on the loan. Okay. This system will also allow you to just view your loan pipeline. You can go in and run conditions reports if you have open conditions or you want to see if there's any outstanding documents that need to come home court. You can print that here. You can create reports. Now, once the loan is sold to the servicer and then the servicer puts that loan into a mortgage-backed security, you will not see that loan anymore in your pipeline. So if you need information from us regarding documents, whatever the case may be, just contact myself or one of our underwriters. Okay. Be sure to log off the system. Also, if you aren't getting into the system often enough, it will deactivate you. So I suggest you go into the system and log in at least once a month to keep your user codes active. After 90-some-odd days, it will ask you to create a new password. And when we initially assign you a password, we highly suggest that you make changes to those passwords. The system will time you out. If you are in the middle of a reservation and you get sidetracked, it could throw you out of the system. If you have not hit submit, you will be able to see the loan in your pipeline, but the system will not allow you to access the records. So if you don't think you're going to finish the reservation in time, or if you're running sidetracked, just go to that last co-mortgagor screen and hit submit. What will happen, you'll get an incomplete reservation, but that will at least give you the ability to get back in and open that application back up to complete it, to get your reservation. Okay? And then once you're finished with the system, just log out. Now, within the PowerPoint, you saw I had my contact information, Macy's contact information, for you to contact us. We'll be more than happy to, answer any questions you may have. So feel free to contact me. I will just make a few comments on the process or the compliance on the program. Just to go back to income, for example, when you're calculating income and you've calculated it to be close to the income limit, Home Corporation will be more than happy to count that income for you, so you don't reserve a loan and then find out that they're over the income limit. You can email us the VOE, the pay stubs, whatever income information you have, and we'll be more than happy to calculate that income for you. We also have the ability to use some income and not use some income. For example, if you have a borrower that has overtime or bonus or tips, we can actually average up to 27 months worth of employment. So that may help you get under the income limit by averaging that out. If the borrower has not been on the job for more than 15 months, we can knock the overtime and bonus right off the top of that borrower's household income. So we have some leeway. We have some ways to get around some of the income difficulties if that's the scenario that you come up across. Now, I'm going to go ahead and close, but please, again, feel free to contact Mississippi Home Corporation. If you have any questions, we'll be more than happy to assist you. Thank you very much.